Hi everyone. Hello. Good evening. Wait, I'll just see that if there is any comments. Comments. I'm just waiting for you to join in once I get to know that you are in the chat box. I'll start the class. Just okay. My voice is audible. Everything is fine. Correct. Yes. Deepak ji. Good evening. Disha. Hi. Good evening. Good evening. So today I'm going to start the topic, and you know that I'm in my office. Office में हूँ आज. So that okay. Good evening, Sandhya. Good evening, Abhilash ji. Good evening. Hi, Sandhya ji. Hi. Good evening. So my coffee. I finished my coffee. Okay, here. Mm, We are going to start with the topic. In last class, we discussed about some of the important topics such as, okay, sir, in this chapter, unit number 1, national income accounting, we started with the first point, that is, what is national income, why we have to calculate national income, what are the significance of national income that we discussed. Secondly, we discussed about what are the important concepts. In that, we have done one big formula sheet. Remember the formula sheets, number 1. Fast. Shall we revise? Revision. Number 1, gross domestic product. How to calculate gross domestic product, sir? Current year quantity multiplied by current year price. That is nominal GDP. Sir, how to calculate real GDP? Current year quantity multiplied by base year price. Real GDP. Third formula, it is about GDP deflator. How to calculate GDP deflator? Nominal GDP divided by real GDP multiplied by 100. That is GDP deflator. With the help of GDP deflator, we can calculate whether there is inflation or there is deflation. Yes, sir. Understood. उसके बाद we discussed about net domestic product. What is the difference between gross and net, sir? What we have to do? We have to deduct depreciation. Once we deduct depreciation, we will get to know that what is gross domestic product and what is net domestic product. Okay, sir, we understood what is net domestic product. Later, the next thing that we have to discuss is about national product, gross national product. How to calculate gross national product at market price? Gross domestic product at market price minus uh, plus net factor income from abroad, NFIA. We have to add NFIA. Yes, sir, we understood that. Later, we discussed about gross national product, net national product at market price. Net national product at market price. Sir, how to calculate net national product at market price? Gross national product at market price minus depreciation, or gross domestic product at market price minus depreciation. Gross domestic product at market price minus depreciation plus NFAI, net factor income from abroad. We will get net national product at market price. Later, we discussed about how to calculate gross domestic product at factor cost, gross domestic product at market price minus indirect taxes plus subsidy. We will get gross domestic product at factor cost. Sir, how to calculate net domestic product at factor cost? Gross domestic product at factor cost minus depreciation. How to calculate gross national product at factor cost? Gross national product at factor cost is equal to gross domestic product at factor cost plus NFIA, gross national product at factor cost. Okay, sir. How to calculate net national product at factor cost? Gross national product at factor cost minus depreciation. Gross national product at factor cost minus depreciation. What is net national product at factor cost, sir? Nothing but national income. So there are many ways to calculate net national product at factor cost that we have already written in the formula sheet. I just told you only one formula. Minimum 5 extra formulas are there, starting from gross domestic product at market price, starting from net domestic product at market price, starting from net national product, gross national product at market price, starting from net national product at market price, and gross domestic product at factor cost, net domestic product at factor cost, like this. There are 5 other methods to calculate. So that all these things that we discussed in the last class, and later we discussed about circular per capita income. What is per capita income? What is per capita income? A real GDP divided by population, that is per capita income. Later we discussed about personal income also, and we have seen some questions as well. Later we discussed about what is circular flow of money. Remember, there are 3 phases here. One is production, distribution, disposition. These are the 3 phases. Based on that, we have 3 methods. One is net value added method. Correct? No, we discussed about net value added method, and the second one is income method. Third one is expenditure method. We already know what is net value added method. How to calculate net value added? How to calculate net value added? We are calculating the value added by each subsectors. Each subsectors, we are calculating value added. How to calculate value added? Total price minus intermediate purchase. Total price minus intermediate purchase. If I do that, I'll get net value added by each sector, each subsector, each subsector. If I add everything, we will get net value added by all the sectors. So this is value added method. This is value added method. Now, in this class onwards, we are going to discuss about income method, sir. Sir, how to go for income method? Kaise jaye, sir? Income method. See, production is carried out by the combined effort of all the factors of production. Correct? It is the combined factors. It is the combined effort of all the factors of production. The factors are paid factor income from the services rendered. Correct? No. From the services which is rendered by each of them. Services which is rendered by everyone, they are getting some income. So everyone are getting paid. So in other words, whatever is produced by a producing unit is distributed among the factors of production for their services. See, now I will produce, remember, produce water bottles. Correct? Remember this. I will produce water bottles. This water bottles, no, I will sell it. Once I sell, I'll get the money. I will distribute that money to the factors of production. So this is value added by factors of production. So under factor income method, also called factor payments method or distribution share method, important one, AB1. So you should not forget this. All these are other names for income method. Okay. Under national income is calculated by summation of the factor income paid out by all the production units within the domestic territory of a country as wages, salary, rent, interest, and profit. And salary, wages, both are same. Compensation to employees, rent for land, interest for capital, profit for organization. All these are the incomes which are derived by all these guys. Everything put together, it is the income of all these guys. By definition, it includes factor payments to both residents and non-residents. Anything which is paid to residents or non-residents, everything is included here. Thus, net domestic product at factor cost. Net domestic product at factor cost is equal to sum of factors income paid out by all the production unit within the domestic territory of a country. Basically, what is income method, sir? Everything which is paid to the factors of production. Anything which is paid to the factors of production, putting this together, it is factor method. Net domestic product at factor cost. To this, you have to net it. It's net, not gross. Guys, it is not gross. If it was gross, what you have to do? Add depreciation. You had to add depreciation. Here, don't add depreciation. Why? Because it is not gross. It is net. In net, don't add depreciation. See, compensation to employees, operating surplus, mixed income of the self-employed, net factor income from abroad. Sir, why are we adding net factor income? Because it is national. Here it was domestic. Hannah, here it was domestic. But here it is national. That's why I am telling you. So you have to add. See, this is domestic here, but this is national here. National co and domestic co, there is difference. So that's why we are adding net factor income from abroad. So we are adding net factor income from abroad. Okay. Yes, sir. Note, while using income method, capital gains, windfall profits. Capital gains, we know. Sir, what is capital gain? क्या होता है sir? What is capital gain? Capital gain is nothing but you have, okay, in case of capital gains is nothing but uh, you have purchased one share for 200. For example, you have purchased a share for 200 and you are selling for 220. This is your capital asset. Share it is capital asset and you are selling it for 220, Baba. You are selling it for 220. What is the difference of 20, sir? This difference of 20 rupees is CG, capital gain. This difference of 20 rupees is capital gain. Okay, this is capital gain. Now the question is, sir, what is windfall profit? Ekkadando vachindi, sir. You received money from somewhere. Somewhere means what, sir? That is nothing but windfall. For example, you purchase 10 rupees ka lottery ticket, and the value of lottery ticket is 20 crore. 20 crore is the lottery. So this amount for 10 rupees, क्या गया सर? 10 रुपए गया सर. क्या मिला सर? 20 crore मिला सर. Correct? No. Now, sir, how you get 20 crore? How lottery ticket works? You know this, right? How lottery ticket works? Everyone put money. एक मछली गया पानी में, चपाक. दो मछली पानी में गया, चपाक चपाक. तीन मछली पानी में गया, चपाक चपाक चपाक. That means everyone went on paying. Finally, you are getting 20 crore. Okay, that is how you are getting 20 crore. 19 crore, 99 lakh, 99,990 rupees is other machli, pani mein gaya, chapak, 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 chapak. And which pani is that? Your pocket. So you have all that 10 rupees in your pocket. Okay, understood? Yes, sir, understood. So here, so this is windfall profit. ఎక్కడుందో వచ్చింది సార్. I got money. Yes, sir. I got money. So transfer income and income from sale of second-hand goods and financial assets and payments out of past savings are not included. I'll explain. See, transfer income. Do you know what is the meaning of transfer income? Do you know the meaning of transfer income? We have discussed about transfer payment in last class. Sir, what is transfer payments? You are not doing any work. Still you are getting money. Nothing but government gives, sometimes government gives freebies. That freebies is nothing but transfer income, transfer payment. You are not doing any work. You are not doing any work, but still you are getting money. That is called as transfer payment or transfer income. And income from sale of second-hand goods. You are selling a goods which you have already purchased. You purchased it and you sold it. Second-hand goods it is. In case of second-hand goods, I should not include. Why, sir? Because it is already included when it was first-hand. It was already included when it was first-hand. So that we are not including here again. However, past savings are also not included. If payments out of past savings. Why? Because past savings is already included in past. Don't include it again today. However, commission, brokerage and imputed value of the services provided by owners of the production units will be included. Commission is included, brokerage is included. Why we have to include commission and brokerage? Example, you had one land. People remember you had a land. This land, you wanted one buyer. You did appoint me to sell this land. You are not finding any buyer to this land. You did appoint me to sell this land. I said, okay. And I went in search of a person and that person came to purchase this land. Finally, your land got sold. Okay? Finally, what has happened here? Your land got sold. Who is happy? You are happy. For that happiness, you will pay me some amount. Commission. Do you think I received that commission simply? No, I did put some efforts. I found some buyers. I went in search of buyers and I got some commission. Okay, this commission, brokerage, and all these values, no, we have to include as they add to the current flow of goods and services. That is not given simply, it is for some work which is done. So that's why it has to be included. Okay. So usually it is difficult to separate labor income from capital income because in many instances, people provide both labor and capital services. Correct. No. Usually it is difficult to separate labor and capital. For example, in my office, this office, the assets that you are seeing here. So this asset is my asset. My asset in the sense I invested it. My own capital it is. At the same time, who is working in my office? I myself is working in my office. I am working in my office. That's why all these things are considered as what? I don't know whether if I get some profit, listen, if I get some profit, this profit is for capital or my labor, sir. Can I differentiate this? Not possible. Not possible. I did invest. I myself work here. So whether it is my income for capital or income for my labor, sir, in many instances, I cannot bifurcate. So it is difficult. Usually it is difficult to separate it. So this is one drawback here. So this is income method. Basically, what is income method, sir? Income of everyone is included. That is income method. But remember that okay. So here, income method in case of income method, you have to remember that these items, no, these items are not to be included. Some of the items are not to be included, such as capital gain, windfall profit, transfer income, income from sale of second hand, financial assets, payments out of past savings don't include. But you have to include commission, brokerage, imputed value of the services provided by the owners of the production units will be included. So some of the things are included, some of the things are not included. Should not include. Keep this in mind. Next one, expenditure method. So in case of expenditure methods, what happens in expenditure method, sir? In the expenditure approach, also called income disposal approach. Remember, this is income disposal approach. Expenditure is nothing but disposing your income. No, you are spending your income. National income is aggregate final expenditure in an economy during an accounting year. So in expenditure approach also, which is also called as income disposal approach, national income is aggregate of all my expenditure. Array, my income is your expenditure. All expenditure put together is all income put together. It has to happen like that, no? But with some adjustments. GDP at market price it is GDP at market price is equal to summation of final expenditure. Here written. It's already written here. Summation of all your expenditures in a country, everything put together, it is national income. Wait. Sir, why expenditure we have to include everything, sir? Why have to include everything in the expenditure? Why? Because, see, you are paying me some amount. For what? For what you will pay me the amount? For taking class, no? I am taking class to you. If I am taking class to you, that means what? I am giving some service to you. I am giving some service to you. Correct? No. I am giving some service to you. That means your expenditure will be my income. So why you do the expenditure? Because I gave you some service. That means I did work. Everything put together, it will become my, everything put together, it will become the national income. So in this approach to measuring GDP, which considers the demand side of the products, we add up the value of the goods and services purchased by each type of final user mentioned below. So we add up the value of the goods and services purchased by each type of final users mentioned below. Who are the final users? Final consumption expenditure. It is private final consumption expenditure and government expenditure. Wait, there is one more. Here. Government final expenditure. These are the two types here. See, final consumption expenditure. What is final consumption expenditure? For example, if I purchase this plastic water bottle, if I purchase this water bottle, this is for final consumption. No? I start drinking water from this water bottle. This is final consumption expenditure. But the plastics which are bought, by the company, Aquasure, this company. So they are purchasing this plastic water bottle, plastics for doing the water bottle. That is not final consumption. That is intermediate consumption. Why? Because they sell that water bottle. They purchase plastic, they do the water bottle, fill the water, they sell the water bottle. So this is not final consumption expenditure. This is expenditure. That is intermediate expenditure. Now, there are final consumption expenditure. There are two types of expenditure. Number one, private final consumption expenditure. That is nothing but this. If I purchase this, this is private purpose, not for government, not by government. See, to measure this, the value of final sales of the goods and services to the consumer, households, and non-profit institutions serving the households acquired for consumption are multiplied by market prices and then summation is done. So what has happened here? All the final consumer goods which is purchased, all the final consumer goods. See, plastic is not final consumer goods, but plastic bottle is final consumer goods. So all final consumer goods which is purchased multiplied by the market price per final consumer goods. Market price per goods. We have to multiply that. Once we multiply, we will get the final expenditure. Summation of all the products. Summation of all the quantities of all types of products produced in India. If you do the summation, you will get the final expenditure. It is also includes the value of primary products which are produced for own consumption by the households, payments for domestic services which one household renders to another. See, it is not required that I have to take the services from the business. It is not required that I have to take the services or purchase the goods from final business. Not required. I can take this from other household as well. Correct. No, that is also included. The net expenditure on foreign financial assets or net foreign investments, land and residential buildings purchased or constructed by household are not part of PFCE. What is PFCE? Private final consumption expenditure. So if you see that, the payments for domestic services, the net expenditure on foreign financial assets or net foreign investments, land and residential buildings purchased on, or constructed by household are not part of PFCE. Why it is not part, sir? Because it is investments. If you are purchasing foreign financial assets, okay, if you are purchasing foreign financial assets, net foreign investments in land, or you are purchasing residential buildings, you are constructing the house, are not for a final consumption or private consumption. We don't include it here. Even though it is final consumption, we don't include that here. Why? Because there is something called as capital formation. There is something called as capital formation. There we have to include that because it is investment activity. It is investing activity. That's why we are not including it here. We are including it in investment. Capital formation, we are including that. Sir, they are included in gross capital formation. I just told you now. They are included in capital formation. Thus, only expenditure on final goods and services produced in the period for which national income is to be measured and net foreign investments are included in the expenditure method of calculating the national income. So basically, sir, what is the point here? Final consumption, anything that we have purchased for final consumption, that will be included. Anything that we have purchased for final consumption, no, that will be included. Okay. Yes, but it will not include what? It will not include the anything that you purchase for construction, building, land, foreign investments, financial assets. No, don't include that. Why? Because it is capital. It will be included in capital formation. Same way, there is something called as government final consumption expenditure. Sometimes government will also purchase. Government will purchase some goods and services. Since the collective service provided by the government, such as defense, education, healthcare, etc., are not sold in the market. They are not. Sometimes they are not sold in the market. See, government is giving healthcare services, government hospitals. Government is giving education. That is government schools. Correct. They are not sold in the market. It is given free. The only way they can be valued, how to calculate the value of that services. Now there is one. Listen. I'll tell you. There is one hospital. There is one hospital, and usually in hospital you have to pay somewhere 2 rupees. 2 rupees for registration. Just to register how many patients have come here. You have to give 2 rupees. Okay, you have to give just 2 rupees and you have to register. And you have to go to the consult the doctor and he will charge you nothing, zero. He will charge you nothing. Rupees 2 you have to pay. This doctor who is there in his chamber, no, he will charge you nothing. Okay. To this doctor, he is highly paid. Who will pay this doctor? Government will pay this doctor. Can I say that government is spending on these doctors? At the same time, government will take care of the electricity bill. Government will take care of IAS. Government will take care of parking. Government will take care of every expenses which has happened. So, all the expenditure which is done by the government, no, that I will add. This is national income. This is the part of national income. So, the only way they can be valued in monetary terms is by adding up the money spent by the government in the production of these services. Whatever the money which is spent by them in the production of these services, no, that will be considered as the income. This total expenditure is treated as consumption expenditure of the government. Government expenditure on pensions, scholarships, unemployment allowance, etc. should be excluded. Why? Because they are a transfer payment. I told you, in case of national income, while calculating the national income, please do exclude those items which is not producing anything. Scholarship, in return, government will get nothing. Pension, in return, government is getting nothing. Unemployment benefit or transfer payments, in return, government is getting zero. All these items don't include. You have to exclude because in return, economy as a whole, we are getting nothing. So this is one point you have to keep in your. Okay. Abhila says every government hospital, sir. Yes. In every government hospital, you have to pay 2 rupees. I don't know other hospitals. Why this 2 rupees, sir? Just to know how many patients or what is the how many people they enter. How many people they enter the hospital. Yes, Abhilash ji, you are right. Now, gross domestic capital formation. Next type. So first we discussed about final consumption expenditure. Now, the next type of expenditure is gross domestic capital formation. Gross domestic fixed capital formation, that is gross investment, is that part of the country's total expenditure which is not consumed but added to the nation's fixed tangible assets and stocks. We are not consuming it, but we are adding to the capital of the country. For example, bridge, dams, roads, house, and any other structures. All these things are the gross domestic capital formations, part of assets of the country. Okay, sir. It consists of the acquisition of the fixed asset and accumulation of the stocks. The stock accumulation is in the form of changes in the stock of raw materials, fuels, finished goods, and semi-finished goods awaiting completion. Accumulation of stock. What stock, sir? The stock in trade. Accumulation of stocks, nothing but stock in trade. The stock accumulation is in the form of changes in the stock of raw materials, fuels, finished goods, and semi-finished goods. Changes. See, opening stock was there. Opening stock was there. I'll write it here. क्या हुआ? Opening stock was already there, and there is closing stock. Opening stock was 1000. Closing stock is 1200. Then what is the change here? 200. Only this you have to take into consideration. Don't take 1200. Why, sir? Because 1000 is already included in previous year. 1000 is already included in previous year. Only 200 is included in this year. 200 is the income of this year. That's why you should not include the opening stock. Only the difference between opening and closing, you have to keep it. So that is one point. And lastly, net exports. Net exports are the difference between the export and imports of the country during the accounting year. It can be positive or negative. Net export means difference between export and import. Difference between export and import. If answer is positive, then it is good, sir. Why? Because export is greater than import. But usually it is negative. Why? Because in India, we are importing more than exports. We are importing more and the exports are less. How do we arrive at national income or NPF? Wait. It's not NPF. It is net national product at factor cost. It's not NPL. It is factor cost, net income, net national product at factor cost. How to bring, sir? Or gross national product at factor cost. How to bring it there? See, find the sum of final consumption expenditure. That is C, final consumption, GDP at factor cost, and net exports. So this you have to calculate by this. GDP at market price is equal to all your consumption, government consumption plus net exports. People, just I'll strike this out. I'll write it again. It is consumption expenditure plus government expenditure plus net exports. Net exports. So you have to do it like this. To gross domestic product and net factor income from abroad. So this is gross domestic product, no? This is nothing but GDP at market price. This is GDP at market price. GDP at market price plus net factor income from abroad, we will get GNP. Remember the difference between GDP and GNP, D and N. That is NFIA. What if I subtract indirect taxes and add subsidy? Net indirect taxes. If I deduct net indirect taxes, I will get factor cost. It is GNP at factor cost. It is GNP at factor cost is equal to GNP at market price minus NIT. See, these two formulas that we already know. What is the extra formula in expenditure method? C plus G plus NAX or NX. C, that is consumption, final consumption expenditure plus government expenditure plus net exports. Everything put together, it is GDP at market price. GDP at market price plus NFIA, we will get GNP at market price. GNP at market price minus NIT, net indirect taxes, we will get GNP. GNP at factor cost. We will get GNP at factor cost. Ideally, all three methods of the national income computation should arrive at the same figure. It has to arrive at the same figure, but it won't. But it is very difficult with some necessary adjustments. You have to do the adjustments and you have to get the answer. When the national income of the country is measured separately using these methods, we get a three-dimensional view of the economy. One is production view, other one is income view, other one is expenditure view. Different views. Each method of measuring GDP subject to measurement errors, and each method provides a check on accuracy of other method. So usually we will calculate in all the three methods and it will provide the check on other methods. See, there might be small error and small difference might be there. You can make some difference. That's okay if there is some difference. But remember, there should not be huge difference. Okay. Here, by calculating total output in several different ways and then trying to resolve the differences, we will be able to arrive at more accurate measures than would be possible with one method alone. So instead of going for only one method, it is better to calculate in all the methods and just to see the difference. So what will be the difference between all the methods, we will get to know and we can easily solve the differences. Okay? Yes. Lastly, GDP and welfare. GDP and welfare. Why we require GDP and what is the connection of GDP with welfare? Can the GDP of a country be taken as an index of the welfare of the people? No. Especially in the place like India, no. GDP many a time it will resemble, but I say that no. No, why? Because see, in India, spirituality is at its best. Spirituality. What we do is we don't value money. We want spirituality here. In my case, yes. In my case, I am into both. Sir, ಹಾಗಾದ್ರೆ ಹಣವೇ ಮಾಡೋದಿಲ್ಲ ನೀವು. You don't do money, huh? No, I do. I do, but I am more into spirituality. More into spirituality. I always believe in kartavya, karma. What I have to do, my duty I have to do. The monetary income that I get it, that's secondary. Monetary income that I get, no, that is secondary. What I believe is students has to get the good knowledge. They have to get the satisfaction. Full paisa wasuli hona chahiye. So that is what I believe in. So that if I go behind that, money will follow me. Why? Because you start loving my class. If you start loving my class, then definitely you tell it to some people and they will come to know about me. And later, I will get more number of students. I'll get more connections. And there are more good chartered accountants and, best chartered accountants in the country. Best chartered accountants in country. And I have a good set of students. They became my professional colleagues. Tomorrow, you start referring some new clients to me. Sir, if I become chartered accountant, why will I refer clients to you, sir? I don't know. Or you become a good chartered accountant and definitely you start valuing or we will make a good connection. We'll make a good connection here. That network is net worth. Correct. No. Finally, all my students, now I have minimum 2000 students, at least 2000 students. Okay. They are not in my contact, but I know them. At least 2000 students. And think, every students, every month they pay me at least 10 rupees. 20,000 per month. ಕೂತಲ್ಲಿ 2,000 ಆಯ್ತು. Okay. Sir. ಒಳ್ಳೆ ಐಡಿಯಾ, ಬಟ್ ಯಾರು ಕೊಡ್ತಾರೆ ಸರ್? ಸುಮ್ಮನೆ 10 ರೂಪಾಯಿ ಯಾರು ಕೊಡ್ತಾರೆ? No one, I know. There are many reasons to dispute the validity of GDP as perfect measure of well-being. And that's why I said well-being, not with the GDP. There are many other things which we have to give importance. GDP exclude following. Even if you take monetary items, not spirituality, money as the measure of well-being, still it will exclude some of the things. Income distribution, and therefore GDP per capita is completely inadequate. See, number of population. In India, population includes poor also. Population includes Ambani also. There is one person who can spend 1,000 crores on wedding. There are some people who are getting married in temple. Why? Because on 10 ಜನರಿಗೆ ಊಟ ಹಾಕ್ಬೇಕಲ್ಲ, ಅಷ್ಟು ಹಣ ಇಲ್ಲ. So we'll get married in temple. Simply one yellow color tag. Finish. Correct? No, that is also there. So there are people who are doing, and their guests are Mark Zuckerberg. Correct? No. And there are some people in whose wedding there are some celebrities who are now the heroes are becoming background में dancers. You have seen some videos recently. There are some videos where hero and heroines are welcoming the couple. Pushpa Vrishti में couples are coming. Many film ka heroes and many film ka heroines are welcoming this couple. And there are trios. There are 3 big actors, so-called big actors. So they are dancing. They are dancing in the background. Moye event it is. Okay. I'm not talking about any renowned celebrities. I'm talking about celebrities like me. It too chiller celebrities. Okay. So here, measure of welfare and per capita income. What I was telling is per capita income. See, if the total national income divided by per capita, we are getting very good amount in lakhs. We are getting amount in lakhs. But actually my income is in lakhs. Okay, might be. My income is in lakhs. You are also one amongst the per capita, no? You are also one amongst that 140 crores. What is your income? In thousands or in zero? You are not earning at all, sir. I am not earning at all. Then your income is zero, no? Don't you think per capita income, what is the measure with that we calculate per capita income? That is bluff. That is nothing but a lie it is. So consequently, the countries may have significantly different income distributions and consequently different level of overall well-being for the same level of per capita income. Per capita income is same to everyone. Ambani's per capita income is equal to my per capita income, but we are not same, no? Okay. So quality improvements in the system and process due to technology are not considered. So we are not considering technology anywhere. That is also wrong. Production hidden from the government authorities. Example, smuggling. That is actually production which is hidden from the government. Illegal productions. Okay. Next, non-market productions and non-economic contributors. Example, my mother. She is working. She works, and that contribution. No, it is not shown anywhere. That contribution, where we will show that contribution to well-being, for example, health of a country's citizen, educational level, etc., may affect the well-being level. So that will definitely affect the well-being level. Lastly, here, economic bads, for example, accidents, crime, pollution, traffic congestion, etc., which make us worse of the volunteer work and services rendered without remuneration undertaken in an economy. So there are 2 things here. Economic bad. It is very bad that because of accidents, because of traffic congestion, we are wasting time, we are wasting money on that. See, think that if there was no crime, no requirement of police, no. Why we want police? Those lakhs and lakhs of police, we can save that money. We can put their work into something which is very important. There are some volunteer work. Voluntarily, there are some people who work. Their volunteer work, no, that is not considered. That is also bad, no. So we have to consider that. Okay. Many things that contribute to our economic welfare, such as leisure time, fairness, gender equality, security of community, feeling, etc. All these things, no, that is also required. So we are not considering that. So that will also contribute to the welfare. Correct? No. Now, just like giving recognition. See, nowadays we are getting recognition for everything. Sir, I am a content creator. Now there is something called as Content Creators Award. I was thinking, sir, this reels. People do reels, no, and people make some content. They create some content. There is no value to them. But Modi ji is giving Content Creators Award. How good it is. So I did not even think that Modi ji will recognize their work. See, simply it is not given to Moye Moye song. Remember, the Content Creators Award, it is not given to Moye Moye song. The content who is genuinely creating some content, no, for them it is given. Okay, those who are creating some content which is socially beneficial, for them this award is given. I believe so. If you have seen that award function, no, then definitely you will get to know. Okay. Now, example, simply Shraddha, correct, no? If I'm not wrong, simply Shraddha, or it is given to Mithali, some singers who are creating contents, for them it is given. See, it's a good act actually, because they are recognized. So we are recognizing them. Anyways, leave. Tomorrow, if you become, not if, you will become a chartered accountant. When you become chartered accountant, you start creating contents on some important CA related factors, Ind AS, or you are creating some finance related contents. In all these cases, you will also get some awards. You have to take that award. Both positive and negative externalities, which are external effects that do not form part of the market transactions. What is this externality, sir? Soon we are going to discuss about externalities. Positive externalities are there, negative externalities are there. That is also not considered in national income, GDP. The distinction between production that makes us better off and production that only prevents us from becoming worse off. Example, defense expenditure. If there was no terrorism, then there was no defense. Defense was not required. Police protection was not required. We could have used their efforts for some other purpose and we could have developed. Increased expenditure on police due to increased crimes may increase GDP, but these expenses only prevent us from becoming worse off. It will not increase the crimes. If there was no crimes, no, then police was not required. If police is not required, our GDP would have increased. But there are crimes, then we have to put some efforts on preventing that crime. So that these policemen, no, these judicial laws, so what that will do, that will prevent us from reduction in the GDP. That's why all these things are required. So there is GDP and welfare. Okay. Lastly, what are the limitations and challenges of national income computation? Lack of agreed definition of national income. What is national income? It is GDP, NDP, GNP, NNP, GDP at factor cost, NNP at factor cost, GNP at factor cost, NDP at factor cost. What is the answer? Finally, we concluded that NNP at factor cost is national income, but there is no proper definition of national income. How to calculate national income? There is no proper definition. Accurate distinction between final goods and intermediate goods. What is final goods? What is intermediate goods? Now, sugarcane, in our last example, last class mein example, in that example, Sugarcane is final product in primary sector, but in secondary sector, it is intermediate goods, sir. Okay. Sugar is final product in secondary sector, but it is primary in, sorry, it is intermediate consumption. It is intermediate consumption in tertiary sector. Vidaktidiya. So that's why how to distinguish between final goods and intermediate goods. That is one issue. Issue of transfer payments, whether we have to include it or not, sir. Services of durable goods. Example, durable goods means we can use it again and again. That is durable goods. Now there are some durable goods we have to include their services or not. Nothing but depreciation. Depreciation. How to calculate depreciation? In that depreciation amount, no, that differs from time to time. Difficulty of incorporating distribution of income. Income getting distributed between rich and poor. How to incorporate that distribution of income. Valuation of new goods at constant prices. Is it possible to calculate new mobile phone at the same old price? Not possible. We have to increase the value of that mobile phone. Required. Why? Because we cannot value the same mobile phone at the old price or new mobile phone at the old price. Not possible. And valuation of government services. Government is giving services. How to value that? We are valuing at the expenditure method. Under expenditure method, we are valuing it. But it is not the right way to value it. So these are some of the challenges or limitations which are there in calculation of national income. So this is about first unit, national income accounting. In national income accounting, what did we discuss, sir? In case of national income accounting, we discussed about what is national income, how to calculate it, what are the various concepts, what are the formulas, what are the methods. Three methods, basically value added, expenditure, income method. So these are the three methods. Finally, we discussed about GDP and welfare and what are the limitations of GDP that we discussed. We'll do one thing. We'll take a break, small break of 5 minutes. We'll take 5 minutes break and I'll be back with new unit. Kinetic theory of determination of national income. We'll take 5 minutes break. Fine. Just 5 to 6 minutes. Okay. I'll be back. Yes, welcome back. Now we are going to the next topic, which is yeah. The topic now is the Keynesian theory of determination of national income. Keynesian theory में we are discussing that कि uh, Lord, sorry, not Lord, J.M. Keynes, Maynard Keynes, John, not Lord, yeah, John Maynard Keynes. So this guy, gave many theories. See, in microeconomics, who was famous in microeconomics? Alfred Marshall, correct? No? Alfred Marshall was famous in microeconomics. Same way, in macroeconomics, who is more famous, sir? John Maynard Keynes, J.M. Keynes. So he gave many theories about money. He gave theory about money. He gave theory about public finance. He gave theory about national income. He gave theories. So he gave theory for many items or many topics here. In the previous unit on national income accounting, we have discussed the again. This is March, no? So in the month of March, we get too many calls. Okay. So I'm just finalizing one of my client, very good client. Uh, so I have to give importance to them also required. Okay, I was just finalizing in the morning. So usually this is March. In the month of March, we will have too much of work, very hectic work it is. So that in all my classes, yesterday, day before yesterday, so we got some disturbance. I don't say that it is disturbance. It is very much required. They are my clients. I have to give them importance. But so I am so sorry. I have to give importance to you as well. Huh. Here. What we were discussing that in the previous unit, on national income, previous unit on national income accounting, we have discussed the importance of GDP to estimate the macro fundamentals of the country. In this unit, we shall focus on two issues, namely the factors that determine the level of national income and the determination of equilibrium aggregate income and output in an economy. In last unit, what we discussed? The various factors, GDP or any other important factors that we discussed, fundamentals of national income that we discussed. What we are going to discuss in this unit? So we are going to focus on the factors that determine the level of national income. So what are the factors which will determine the level of national income? That means factors affecting national income. We will discuss about that. And what is the equilibrium aggregate income? Equilibrium. We already know what is world equilibrium. So we will discuss about that. We will discuss about equilibrium aggregate income and output. So what is equilibrium level of income? It should not be more than in that income. It should not be less than that income. Equilibrium income and equilibrium output. We will discuss about that. Okay. The Great Depression in 1930 was the greatest economic crisis the Western world had experienced. Many economists then recommended the government spending as a way of reducing the unemployment, but they had no macroeconomic theory by which to justify their recommendations. So they had some recommendations, but there was nothing to justify that. The history of modern macroeconomics was revolutionized in 1936 with the publications of J.M. Keynes, John Maynard Keynes' General Theory of Employment, Interest and Money. Many of many of the topics got cleared in this J.M. Keynes, the theory of employment, interest and money. The Keynes introduced many of the building blocks, of modern macroeconomics. First one, the relation of the consumption to income and the multiplier, which explains how shocks to aggregate demand can be amplified and lead to larger shift in the output. So he explained the relationship between the income and the multiplier. So what is the meaning of multiplier, sir? There is something called as multipliers. How to explain? Now, the speaker, DJ speakers are there, no? So that speaker is actually multiplier. It is multiplier. Example, there is speaker. Now I cannot give the example, proper example or demonstrate. I cannot demonstrate, but you just have to imagine. In your class, there is to have one small speaker, correct? No, I used to tuck it here somewhere. I have to keep it somewhere here. So that small speaker, and we used to get one mic. Okay, that mic, if I speak to that mic, it will take the electric signals and it will send to the speaker. What speaker will do? It will amplify, nothing but my voice, no, it will multiply. So this is called as multiplier. Same way, there are some points in our national income also which will multiply our income. It will multiply the income. For example, I'll give you one more example. I gave you class and I earned some income. That I will put it in my FD. Next year, this FD will also give me some income. That I will reinvest. That reinvested income again will give me some income. Multiplies. The same amount multiplies. We have given one more name to this, that is called as compounding. Yes or no? We call it as compounding. Nothing but multiplier it is. It is called as compounding. Okay. Multiplier. So the multiplier which explains how shocks to aggregate demand can be amplified and lead to larger shift in the output. A small change will lead to larger change in the output. This is multipliers. He explained multipliers and liquidity preference. The term Keynes gave to the demand for money. So why I need to have money in my hand? That is liquidity preference, which explains how monetary policy can affect the interest rate and aggregate demand. We are going to discuss about this specific point in next chapter. The whole chapter is based on these items. Liquidity preference theory, like this. We are going to discuss about this in next chapter. See, I'll tell you. Why do you see? I have a thing. I have crores of amount in my bank account. Crores of amount in my bank account. But if I'm traveling in bus, I should have some money. 50 rupees should be there in my hand now. I should have some liquid money in my hand, at least in my bank account. Mein nowadays UPI is there, sir. But still in bus, we are using money, hard money. We are not paying through UPI in bus. In bus, we are not. Nowadays, smart card has come, but still 90% of the time we will use hard cash to pay the amount. Yes or no? Yes, sir. So that means liquidity preference. Some amount should be there in the hand. We have to get some amount in hand. That is liquidity preference. The importance of expectation in affecting the consumption and investment, and the idea that shift in the expectation are a major factor behind the shift to the demand and output. Listen. The expectation, importance of expectation. If I expect that in future, there will be more demand for the goods. If I expect that in future, there is increase in the price. These two items, no, it will change the investment policy. Think that I am producing these water bottles. Think, I am producing these water bottles. If I am producing these water bottles, if I believe that in future the demand for these water bottles will increase, what I'll do? I will invest more in my company so that I will increase my production capacity. Expectation. Correct, no? Or one more idea. Being a consumer now, being the consumer, if I think that in future, the price of this product is going to decrease. If I think that in future, the price of this product is going to decrease, then what I'll do? I will not spend now. I will save some money. That means right now the value is more. I don't spend on that goods. In future, I will start spending like this. My savings and my investment depends on my expectation about the future. So based on these ideas, the Keynesian theory of income determination is presented in three models. Two-sector model, three-sector model, four-sector model. Two-sector, three-sector, four-sector. So we are going to discuss about, sir, what is this two-sector? What is the three-sector? What is this four-sector? We are going to discuss about these three sectors in detail in this unit. Yahan, in this unit, we are going to discuss about all these three items in detail. First one, circular flow in a simple two-sector model. Circular flow of money or circular flow in simple two-sector model. Directly go to this example. See, this is given in your textbook. There are only two sectors. Think that there is only two sectors. One is household, the second one is firms. Think that there is only two sectors. If there is only two sectors, whatever produced by firms, that will be given to household for spending, for which they will do the expenditure and they will pay money. Correct? Now, this is one circle. This is one circle. Sir, again, listen. Think that first assumption is that there is only two sectors. One is household and the second one is household and the second one is firm. Whatever produced by firms, that goods goes to household. That goods goes to household. That means general public. That goods goes to household, they consume it. For that consumption, they will pay the amount. They will pay the money. This is their consumption expenditure. This is what, sir? This is consumption expenditure. Correct? This is one circle. Next circle, sir. Circle number 2. How they produce, sir? By taking factors of production. Who will give factors of production? Household. For which they will get income. Correct now? They'll get the income for that. So factor inputs के लिए they will get the factor income. Or sir, how it is presented in this diagram? How it is presented in this diagram? Simple, sir. Household give the factor input for which they get factor payment. Ashte. They will give factor input for which they will get the factor payment. And what they do with this payment? They do the consumption expenditure for which this firm will give the goods. है ना? Yes or no? Again. Household, they give the input for which the firm will give the factor payment. That factor payment, they will spend it to the firm, they will give it to the firm, the firm will give the goods and services. So this is called as circular flow of money or circular flow. This is called as circular flow. Assume that there is only two sectors, one is household, the other one is firm. This is how money circulates in the economy. See, concept of circular flow. The circular flow model demonstrates how money moves through the society. Money flows, it is not flows from producers to workers as wages and flows back to producers as payment for the products. That is the basic form of the model. But actual money flows everywhere. It has become flow it is. Flow. But actual money flows are more complicated. Economists have added in more factors to better depict the complex modern economics. For that reason, the model is also referred to as circular flow of income model. So this is just a simplest model to the sector model. In two-sector model, this is the simplest model. But for better understanding, we have to go to three-sector and four-sector model. Four-sector model. Okay, the basic purpose of the circular flow model is to understand how money moves within an economy. Just to see that, just to understand or have a basic idea that how the money moves in the economy. Okay, it breaks the economy down into two primary players, household and corporations. We are breaking down the economy into two players. One is household, the second one is corporation, nothing but firms. It separates the market that these participants operate in as markets for the goods and services and the markets for the factors of production. See, which is the market in these two? Which is the market for goods and services? Household. They want goods and services. Which is the market for factors of production? Firms. They are the market for factors of production. Why? Because they want factors of production. Household want goods, sir. Ashte. So, households owns all the factors of production. And they sell their factor services to earn factor income, which are entirely spent to consume all final goods and services produced by the business firms. So only two sectors here. There are only two sectors. One is household sector and the second one is firm sector. So what firms will do, sir? Firms, they go on producing and they have all the goods. Households, they have, so households have the factors of production Households, they have factors of production, but firms, sir, what firms have? They have goods. They will use these factors of production to produce the goods. For goods which are produced, no, they will start making the factor payments. To whom, sir? To the household. Why? Because households, they will give I'm so sorry, guys. There was an issue in the internet. There was an issue in the internet, so it was giving little, trouble. It was troubling me. Wait, I'll just make sure that the internet is working well.
Yes, sir, you're audible.
Yes. I'll just share the screen. बड़े बड़े देशों में छोटी छोटी बातें होते रहते हैं सारे बेटा here. Yeah. So that is given in the circular flow. Two sector model में circular flow which is given in the point here. So the circular flow of income and expenditure which presents the working of two sector economy is illustrated in a simple manner in this diagram. So if you see that there are no injection into or leakage from the system. This is the system. It is no money is going outside. No money is coming inside. So this is the system. Sir, exactly what is the meaning of leakage and injection soon? In this unit itself, I am going to tell you. In the next sector, three sector model we will understand it clearly. What is that three sector model? What is injection? What is leakage? What is leakage and what is the injection? When government enters, no, there is injection and there is leakage. See, I'll tell you. Better, I'll tell you now. I'll clarify it now. Later, you have a good understanding about this injection and leakage. Listen. So there is household, and there is firm. Now, government wants to earn some income. What government did? Household, you have to pay me tax. You have to pay me personal tax. A firm, you have to pay me what? You have to pay me corporate tax. So household, you have to pay me personal tax, and firm, you have to pay me corporate tax. Now this was the system, no? Earlier this was the system. Now there is leakage. The money is going out from this system. Sometimes government will give the subsidy. What is this? This is injection. This is called as injection. Why? Because government is giving money to all these two guys, household and firm के लिए government is giving money. That is injection. The household and firm, they are paying tax. That is leakage. Money is going out from the system. That is leakage. Money is coming into the system. That is injection. So we will discuss about this injection and leakage in detail. But wait, we will discuss about that. Okay. So there is no right now. There is no other sector. That's why there is no injection. There is no leakage. Injection भी नहीं है, leakage भी नहीं है. Since the whole of the household income is spent on the goods and services produced by firm, household expenditure equal to the total receipts of the firm. Whatever the firm receives, no, that is the income of the household. Whatever household receives, no, that is the expenditure of the firm. So can we say that factor payment is equal to household income? Whatever they are receiving as the factor payment, that is their income now. What they do with this income? They will start spending. That is their household expenditure. Whatever they receive, they start spending because there is no bank. They don't save. So everything they will spend it. So whatever they spend, that is the total receipt of the firm. Firm will receive that. So what is this firm? Firm will receive everything that will be value of the output. Whatever they sell, no, for that they are receiving, no. Everything is equal here. See, if I am firm, I am giving you the income in the form of factor payment. You receive that factor payment. What do you do with this factor payment? You start spending it on the goods. Who gave the goods? I give you the goods. Again, your expenditure is my income. Array, everything is equal here. I gave you the money, that is equal to your income. You spend that money, that is equal to my income. Finish. Ashte. So this is two-sector model. Some simple examples of two-sector model. Now, sir, equilibrium. So what is the meaning of equilibrium? See, everyone, you have to pay 100% attention here. Required. Everyone, all your distractions, keep it aside. Keep it aside because we are going to discuss something which is very, very, very crucial here. Okay. Equilibrium. Equilibrium is defined as a state in which there is no tendency to change. This we know. We have discussed this in previous chapters. Once upon a time, we have discussed this. There is no tendency to change. I don't want to change, sir. This is equilibrium or a position of rest. Sir, I want rest. I don't want to change my scale of operation. I don't want to increase it. I don't want to decrease it. Output is at equilibrium level when the quantity of the output produced is equal to the quantity demanded. What is produced that is equal to quantity demanded. So that is equilibrium. Output is equal to demand. Output wise, quantity wise, whatever the output of the economy, whatever produced by the economy is demanded by the people. This is called as equilibrium. Or no one is unhappy here. Everyone is happy. Whatever I am asking, no, that is produced by the companies, firms. That is produced by firm. Whatever consumer is asking, that is produced by firm. Whatever produced by the firm, exactly that quantity is required by the consumer. This is called as equilibrium. Or I can say that there is no wastage, there is no scarcity. There is no scarcity in consumer point of view. There is no scarcity. In producer's point of view, there is no wastage. He is not producing more. I am not demanding more. This is nothing but the equilibrium. Before we discuss the Keynesian theory of income determination, let us look at the basic concepts. Some of the basic concepts we have to understand now. Once we understand the basic concept, we will go to the concept of Keynesian theory. Basic concepts, definitions, and functions used in this theory of income determination. So we are going to discuss about some of the basic concepts, but you have to be very strong in this basic concept. Okay? So we need to be very strong in this basic concepts. Once we are done with this basic concepts, now all other things which are required, no, that we will understand automatically. Basic concepts and functions. Aggregate demand, AD. Aggregate demand. What is the meaning of aggregate demand? Is what economists call total planned expenditure. In a simple two-sector economy, the ex ante aggregate demand for final goods or aggregate expenditure consists of only two components, which is demand for consumer goods and demand for investment goods. So what is aggregate demand? It can be for your final consumption or you are purchasing for investment purpose. For example, I'll tell you, I purchased a book. I purchased one book, sir. For what purpose? Investment? No, this is for consumption. I start writing in this, sir. I start writing in this. This is consumption. This is demand for consumption. Sir, I purchased AC or I purchased This fan, sir, Crompton fan. I purchased Crompton. For what purpose? Investment. It is one investment, no? 3 years हो गया है. Even today it is working. That means it's an investment. Investment. I purchased plywoods. I purchased table. What is this? This is investment. So only two kinds of expenditure I can do, either for consumption or for investment. This is called as aggregate demand. How to calculate aggregate demand? C plus I. That is aggregate demand. Of two components, remember, of two components, consumption expenditure accounts for the highest proportion of the GDP. Consumption is highest, investment is very less. Consumption is highest. Every day I do consume, but every day I will not invest. So that means which is highest here? C. Consumption is highest. In a simple economy, the variable I is assumed to be determined exogenously. That means it is constant. Remember, usually I dash. I is constant. It is given here. I think it is missed here. I dash. I is usually constant. It will not change. I is constant. Remember, I is constant. Exogenously, and it is constant in short run. Therefore, the short run aggregate demand function can be written as C plus I dash. I dash. This I dash is missing here. Please put the dash. I dash. That is consumption plus investment. Which is highest? C is highest. Which is constant? I. Investment is constant. C plus I. Where I is constant investment. The consumption function, sir. Next one, next important concept we are discussing is consumption function. Right now, we discussed about aggregate demand function. Sir, how to calculate aggregate demand? C plus I. C plus I dash. Remember, usually investment is constant. In 1 year, I will not increase my investment. But consumption will be different now. Consumption can increase or decrease, but investment will be constant. In short run, investment is usually constant. Now, the next function that we are discussing is consumption function. Consumption function. See here, sir, how much I will consume in a year, sir? How much I will consume in a year? That depends on what? That depends on my income. So can I say that C is equal to F of Y? C is equal to F of Y. That means my consumption depends on my income. My income is more, sir. My consumption will also be more. Correct? No? Demand function. Remember demand function. Same way, C is equal to F of Y. C is equal to function of Y. What is Y, sir? Income. Y is nothing but income. Consumption is function of income. Consumption is function of income. My income increases, consumption might also increase. But not in the same way, not in the same proportion. We will discuss about that. We will discuss about that. Right now, you understood this. C is equal to F of Y. Consumption is equal to function of income. Okay, sir. Wait. I'll just open WhatsApp and I'll go to YouTube. If you have any doubts, no, I cannot see that. For that purpose, I'll just log into YouTube. Okay. Someone. Yes. Okay. Now here, C is equal to F of Y. It is function of Y. Function of income it is. So consumption function expresses the functional relationship between aggregate consumption expenditure and aggregate disposable income. Sir, what is this Y, sir? Y is nothing but disposable income. Y is disposable income, which is expressed as C is equal to F of Y. When income is low, consumption expenditure of household will exceed their disposable income. Is it? How, sir? If income is very less, consumption expenditure of the household will exceed their disposable income. Is it? I'll tell you. I'll tell you. Wait. I will tell you. And household dissave. In a sense, they either borrow money or draw from their past savings to purchase the consumption goods. I'll tell you. Listen. Very important one. Everyone, 100% attention here. Think. Okay, in your case, best example is student. You are a student. In your case, do you have any income? What is your income? अरे क्या हुआ रे? हाँ. Oh my goodness. What is happening here? Oh, wow. Why? I'll do it here. हाँ. हाँ. आपका इनकम क्या है? जीरो. Right now, your income is zero. Your income is zero, but still you have expenditure. है ना? You still have expenditure. What do you do? You will ask your parents. Same way, if there is a national or a resident in India, if his income is zero, still he has to live, no? For living purpose, there will be consumption. There will be some expenditure. Okay, sir, how he will manage it? How he will manage? He starts borrowing. He will start borrowing. He will start borrowing. And if he starts borrowing, then there is something called as dis-savings. So, sir, my income is 100, sir. My income is 100. My savings is, my expenditure is 120. This is my income. This is my expenditure. Sir, my income is 100. My expenditure is 120. What to do with this 20 rupees, sir? This 20 rupees, I have to borrow from someone, or I have to use my past savings. So that 20 rupees is called as this savings. Sir, what if my income is 200, sir? Then 80 rupees. What is this 80 rupees? This is my savings. It's not my dis savings, it is my savings. So there is difference between dis savings and savings. Same way, even if you don't have income, even if you don't have income, there will be something called as expenditure. Minimum expenditure you have to do for your living purpose, not just you, even in a business. Even in case of business, even if there is no income, there will be some expenditure, that is constant expenditure. If disposable income increases, the consumers will increase their planned expenditure, and current consumption expenditure also raises, but only by less than increase in the income. Now tell me, to understand this, first you have to understand my example. Everyone, you have to understand my example to understand this sentence. So what sentence says, sir? What sentence says? If the disposable income increases, consumers will increase their expenditure. Obviously, but not in the same range, no. Will you spend everything? No. Instead, you will start saving a bit. If your income is very high, your savings will also be little high. If your income is very less, then what to save, sir? I don't save anything. If my income is very high, then my savings will automatically be high. Think. Per day, your spending is 100. Per day, your spending, consumption is 100 rupees. Per day, your income is 50 rupees. Can you save anything? No. Per day, your case scenario 2. Per day, your spending is 100. Your income is 100. Can you save anything? No. Per day, your income is 120. Your spending is 100. Now you can save 20 rupees. You can save 20 rupees. Per day, your spending increased to 500. Don't you think your spending also increases little bit? You start living a lavish life. You start living your life now because earlier your spending was 100. Now your spending is not 100. You start spending little extra. Something extra you start spending now. है ना? You start spending extra. Your spending increases to 150. What has happened to your income? From 100, it increased to 500. 4 times extra. 4 times extra. It increased by 5 times actually. 5 times. But what has happened to your expenditure? It increased by 50%. 0.5 times. It increased by 50%. Income increased by 400 rupees. But your spending increased by 50 rupees. Obviously, this is the case. Other amount will be your savings. So that is given here, but only less than increase in income. Income increases by 400 rupees, but your spending has increased by only 50 rupees or 100 rupees like this. Always remember, this is practically, this is the case. This has happened in my case. This will happen in your case also. Right now, your spending is very less. You do the calculated spending. Why? Because your parents will give you calculated amount. You will not do the lavish spending. But when you start earning, no, your income increases, doubles, but your spending increases by bit. Why? Because you start thinking about savings now. If your income is very less, then you don't think about savings. You know that you cannot save. But if your income is very high, then you start thinking about savings. So this is given in this point. जा रहा है दिमाग में, है ना? Yes, sir. Okay. Now, yeah. Next point here, listen. That is given by the specific form of consumption or income relationship termed the consumption function proposed by Keynes is as follows. C, consumption is equal to A plus BY. First, what is the meaning of A, sir? A is constant expenditure. I told you, na, even if you don't have your income, even if you don't have any income, still you have some spending. This is constant. This is constant expenditure. This is constant expenditure. A is constant expenditure. Yes or no? Yes. Plus, this is constant. Anyhow, A is constant expenditure. If your income goes on increasing, you will start spending, but not in the same amount or same proportion. Your income increases by 100%, but you increased your expenditure by 50%. You don't spend everything. You don't spend everything. You will spend only some amount here. You don't spend everything, bachcho. You'll spend only some amount. Okay. So this is BY. What is this B, sir? Kind of beta. Change in not percentage, change in consumption divided by change in income. You tell me. Remember chapter number 2. In chapter number 2, percentage change in quantity demanded divided by percentage change in price. Elasticity. Elasticity, the formula for elasticity. Now you tell me, which is independent here? Which is independent? Demand or price? Price is independent. Which is dependent? Demand is dependent. As and when price changes, Demand changes. Numerator is dependent, denominator is independent. Numerator is same way even here. Numerator is dependent on denominator. As and when your income changes, consumption starts changing. Income changes, consumption also starts changing here. Okay. So this is about I'll be back 2 minutes. I'm so sorry. The call is from home. Mother. She was like 7:30. The time is 7:30. Time ilva manek barlike. Okay. I was like, I'm so sorry. I forgot to inform you. Today the class is still 8:30. Okay. You know this, right? I believe that you know this. Class is still 8:30. Huh. ಮಗ ಒಂದು ಬೆಳಿಗ್ಗೆ ಹೋಗಿದ್ದಾನೆ ಮನೆಯಿಂದ. My son has left home by morning 8:30 and this is till 8:30 he's in office. Mother, she is concerned. Huh. My parents. Huh. Not just my parents, even your parents. They are also concerned about you. ಮಗ ಬೆಳಿಗ್ಗೆಯಿಂದ ಸಂಜೆ ತನಕ ಕ್ಲಾಸ್ ನೋಡ್ತಾ ಕೂತಿದ್ದಾನೆ ಮರೆ ಎಷ್ಟು ಕಷ್ಟ ಪಡ್ತಾ ಇದ್ದಾನೆ. Yes, you definitely get the results. You get a good result. Huh? Okay, here we were discussing about C is equal to A plus BY. Now, what is this B, sir? Marginal propensity to consume, MPC. We call this as MPC. If I get 200 rupees, listen, everyone, if I get 200 rupees, I will spend 100 rupees. And other 100 rupees I will save. What is marginal propensity to consume? 100 divided by 200. Whatever I consume, no, that is 100 out of 200. So marginal propensity to consume is 0.5. Marginal propensity to consume is 0.5. Once again, we'll do one thing here. Income, in case of income, my income is from 0, it increased to 10, 20, 30, 40. And my expenditure, it was 10. Sir, how? There is no income, but you are doing expenditure. How is it possible? I told you. There is something called as constant income. I mean, constant expenditure. That I have to do, no? Okay. Here, my expenditure, income increased, no? So my expenditure is 14. My expenditure is 14. And here my expenditure is 18. Okay, my expenditure is 18. And here my expenditure is 22, 24. Okay. Sir, how to calculate MPC, marginal propensity to consume? That is equal to delta C, sorry, yeah, delta C divided by delta Y. Correct, no? What is delta C here? 4. What is delta Y here? Sorry, here 10. 4 divided by 10, that is 0.4. Marginal propensity to consume is 0.4. What is change here? 4. Delta C divided by delta Y. That is equal to 4 divided by. What is change here? 10. 4 by 10. Answer is 0.4. Here, what is the change here? 4. What is the change here? 10. 4 divided by 10. Answer is 0.4. Remember, marginal propensity to consume, that is the behavior of consumer. It is behavior of the consumer. He will not spend everything what he receives. All his income he will not spend. Remember, complete income he will not spend. So that marginal propensity to consume is 0.4. It will always remain constant. It will remain constant. Okay. Now, if you see this diagram, what is A, sir? Constant, no? Can you see that? It is constant. A is constant. And as and when your income increases, your consumption also increases. How it increases, sir? It increases in the rate of B. B is MPC. What is this difference? This difference is sorry. This difference is what? What is this difference? This difference is BY. This is total consumption. For example, in this line, this is total consumption. What is this? A. What is this? BY. Now A plus BY. What is A plus BY? Here, consumption. Correct now? A plus BY is consumption, no? That is what I told you in this case. Okay. In this case, this is A. If there is one straight line here, this is A. And what is this, sir? This is BY. B is nothing but marginal propensity to consume. Y is nothing but income. B into Y, answer A plus BY. A plus BY, it is C. Consumption is equal to A plus BY. I hope this is clear. So, where C, aggregate consumption expenditure, Y is equal to total disposable income. Y is total disposable income. A is a constant term which denotes the positive value of consumption at zero level of disposable income. Even if your level of income is zero level of disposable income, and the parameter B is the slope function AC divided by AY. What is that? It's not actually AC. It is delta C divided by delta Y. It's not AC by AY. It is delta C divided by delta Y. This is marginal propensity to consume, called as MPC. Increase in consumption per unit increases in disposable income. So what is the increase in disposable income that leads to increase in consumption? So the consumption function shows the level of consumption corresponding to each level of disposable income Y, and is expressed through a linear consumption function as shown by the line marked C is equal to Fy in the figure above. This one. That is total consumption. So function of Y, F of Y is equal to A plus BY. That is also correct. F of Y is equal to A plus BY. This is also correct. The Keynesian assumption is that consumption increases with an increase in the disposable income. But, very important one, the increase in consumption will be less than increase in disposable income. That means B is always less than 1. It is not equal to 0. That means if your income increases, obviously your consumption also increases. Consumption increases, but not at the rate of increase in income. Always remember, B is in between 0 and 1. It can never be equal to 0. It can never be equal to 1. 0 is less than B and B is less than 1. That means marginal propensity to consume neither 0 nor 1. It is always between 0 and 1. It is an assumption. It is an assumption. B, your consumption can never be same as old if your income is increasing. If your income increases, then consumption definitely increases, but not in the rate of increase in income. This fundamental relation between income and consumption plays a crucial role in the Keynesian theory of income determination. एक minute. Okay. Yes, I'm just checking whether you have any doubts or not. Okay, no doubts. Next, relationship between income and consumption. Next one, what is the relationship between income and consumption, sir? Just as marginal propensity to consume, the average propensity to consume is a ratio of consumption defining income consumption relationship. The ratio of total consumption to total income is known as average propensity to consume. It is APC, not MPC, it is APC. What is average propensity to consume? Total consumption divided by total income. See, what is MPC? How to calculate MPC, sir? Delta C divided by delta Y. Change in consumption divided by change in income. Now, delta get cancelled. That means C divided by Y. Array, it's not mathematics. Mathematically, delta you cannot cancel. I'm so sorry. I just told you. Just gave you one idea. Delta will not get cancelled. I just told you. APC is C divided by Y. Consumption divided by income. If you see here, you get one proper understanding. First, we will calculate MPC. First, calculate MPC here. How to calculate MPC? Delta C divided by delta Y. What is delta Y here? 100%. Change in income is 100% change in income. 100 rupees is the change. But consumption increased by how much? What is the percentage of change in consumption? 50 rupees to 125. 50 rupees to 125. That means what is the change? A percentage change is 75 rupees is the change. That means 125%. Okay. Percentage change. I'm not talking about percentage change. Okay. Not percentage. What is the change in consumption? 75 rupees. 75 divided by 100. What is the answer? 0.75. If your income increases by 100 rupees, if your income increases by 100 rupees and consumption increases by 75, see that here also it is increased 75. Here also increases 75. Yahan bhi, everywhere 75, everywhere it is 100. So that MPC will remain constant. Remember, MPC will remain constant. But APC, no. APC goes on decreasing. Remember, APC goes on decreasing. Sir, to what APC will decrease, sir? To what extent APC will decrease? APC will decrease to what extent? This is one homework to you. You have to calculate APC will decrease to what extent? Very interesting one. Very interesting one. कहां तक APC गिर जाएगा? Okay, I'll do one thing. I'll give you 2 minutes break. Okay, because I'm getting a call. I'll give you 2 minutes break. You just tell me if it is possible. Otherwise, it is your homework. Okay. Huh. 2 minutes break. मिला कुछ आंसर? मिला? Wait. I'll check. नहीं? No one got the answer? No? Is it? Okay. I'll tell you. It can reduce till when income increases, APC gets decreased. Correct. If income increases, APC get decreased. APC can be 0. It should be between, is it? Okay, cannot be 0. Okay. It should be between 1 to 0. Is it? Okay, we'll do one thing. Wait. You know Excel sheet. We will use Excel sheet. We will use one Excel sheet so that we will get the clear understanding here. Okay. Say this is Excel sheet. Okay. This is one Excel sheet. What I'll do, I'll start with 0, enter 100, enter 200, enter. What I'll do now? From here, I go on dragging. Okay, wait. 100, 200. I'll drag it to n numbers. See, can you see that? It is increasing. I brought it till, see, 13,300, 13,400 like this. Okay. Now, it is, kitna tha? 50. It was 50. Enter is equal to this plus 75. 125 हुआ ना? If I drag this, it will be 200. Correct? 200. And I go on dragging this till this amount. So it is 10,100. Okay, how to calculate APC? is equal to uh, consumption divided by income. Correct? No. This divided by this. Enter. Cannot be defined. I cannot define. Infinite it is. But here I'll get the answer 1.25. And if I drag this, see 1, I'll get 1. हाँ, कहाँ तक आया? Can you see that? It will never go 0.75k below. It can never go below 0.75 and it can never touch 0.75. It can never touch 0.75. It cannot touch 0.75. It can never go below 0.75. If you want the proof, see, I'll do one thing. I'll drag it to 1000 cell. See, 500, 600, 700, 800, 900, 1000. I brought it till 1172. I did drag it. Okay. I'll go back to that cell. There also I'll drag it, sir. Kahan? Yahan. I'll keep my cursor here and I'll double click. And I'll double click here also. If you see that, can you see? Can you see the result here? 0.750427. No matter how much you drag, it will never touch 0.75. It will not touch 0.75. I'm just copying the formula. How much ever you drag, it will not touch 0.75. See, this is 1172nd result. I'm talking about this. Here. See, I am into 1172nd result. I have done it for 1172 rows. 1172 rows. Still, I am getting 0.75. 0.7504127 जा रहा है दिमाग में. Remember, APC will not touch MPC. APC will not touch MPC and it can never go below MPC. Or can I say that? What I can tell, sir? Wait. What can be told? Huh. How to write one formula here? What do you write? So it is, I'll tell you. APC, APC is greater than MPC. It is always APC greater than MPC. Remember, APC is always greater than MPC. Ashte. APC is always greater than MPC. APC cannot touch MPC. MPC is always less than APC. Okay. Now, listen. APC is calculated at various income levels. It is obvious that the proportion of income spent on consumption decreases per income increases. APC goes on decreasing as and when your income increases. The rest of the income which is not spent on consumption must be saved because income is either saved or spent. See, MPC is 0.5. Then MPS, what is MPS? Marginal propensity to save. Marginal MPC is marginal propensity to consume. What is MPS? Marginal propensity to save. Okay. If MPC is 0.8, that means out of 1 rupee, I will consume 0.8. 80 paisa I will consume. That means other 20 paisa should be savings note. If out of 1 rupee, if I should be my savings, yes, you heard it right. Other 20 paisa is savings. Thus, just as consumption, saving is the function of disposable income. C is equal to f of y, no? Same way, saving is equal to f of y. Yes, sir. The relationship between income, consumption, and savings. Saving is also a function of disposable income. The savings function is given here. S is equal to f of y. See, better explained with the help of this diagram or this table, not diagram. Better explained with the help of table. Disposable income is 0. Consumption is 20. That means your dis savings minus 20. Disposable income is 60. Consumption is 70. That means minus 10. Disposable income is 120. Consumption is 120. 0. 180 minus 170 plus 10. 240 minus 220 plus 20. So this is, see, whatever you spent, after that, whatever whatever it is left, no, that is savings. After spending, anything which is left in your hand, that will be savings. अच्छा, जा रहा है दिमाग में, अंदर. Oof. Look at this diagram. Sir, what is this diagram, sir? Can you understand this diagram? Easy one, nothing. बच्चों, कुछ नहीं है इसमें. Listen. I'll tell you. We call this as equilibrium line. Equilibrium line, supply line, income line, or 45-degree line. There are many names to this. We will discuss about that. Okay. Sir, what is this difference? A. Even at your income, if your disposable income is 0, still you have expenditure, consumption. That means what is this? Consumption line. This is your consumption line. Your income, disposable income is 0, sir. Still you have expenditure. That means this A is constant. This is A. From here, see, this is A, no? Okay. This is constant line, which is A. This is A. What is this? What is this gap? B into Y. Correct? What is this gap? This gap is A. B into Y. This is B into Y. This is A. Then what is total of this? A plus B into Y. What is A plus B into Y? Consumption. That's why this line is consumption line. What is this line, sir? This is your income line. Every rupee increase. So what is given here? 1 rupee increase. 1 rupee increase. It is given in the x-axis. Y-axis is consumption. Now, listen. Tell me, what is the difference? What is this difference? What is this difference? This difference is dash. This difference is this savings. Why it is this savings, sir? Why this difference is this savings? Because your income is less, है ना? Your income is here. That is less. But your expenditure is more. That's why there is this savings here. That's why there is this savings. This is this savings. After that, it is your consumption. This is your expenditure. Yes, That is your consumption and this is your expenditure. Oh, sorry, income. Arey, kya bak rahe ho, sir? This is your income. This is your consumption. What is this? Sir, ये क्या है, sir? This is your savings. बच्चों, what is this? This is my savings. That's my savings. Expenditure and income. The income is more than your expenditure. That's why it is savings. That will be your savings. है ना? Understood? Yes, sir. This is savings and savings. Now they have given that in separate diagram. This savings and savings ko they have given in separate diagram. See, what is this line? Savings line. This is this savings. This is your this savings, and this is your savings. This is savings line. This line is savings line. This line is, bachcho, this line is savings line. If line is below, that means this savings. Your this savings, first your this savings is what? A. A is your this savings, no. Why? Because if your income is zero, still you have to spend some amount. What is that amount? A. If your income is zero, still you have to spend some amount. That amount is A, constant expenditure. Correct? That constant expenditure is your this savings. You don't have income. That zero is your income. Still you have to spend amount. That amount is this savings. Acha. Yes, sir. Okay. Once we will revise here. Shall we revise once? Yes, sir. Listen. This is graph, sir. This is the graph. And what is this? Tell me fast. What is this? This is A. What is A? Constant expenditure. This is A. Okay. Now, what is this, sir? Something that starts from A. That is consumption. This is consumption line. And if your income is zero, this is your income line. Okay. This is your income line. It is always 45 degrees. This income line is always 45 degree. Why it is 45 degrees, sir? Because it is also called as equilibrium line. It is also called as equilibrium line. Whatever you receive, if you spend that, what is y-axis? Y-axis is consumption. No. Y-axis is consumption. X-axis is income. X-axis is income. Y-axis is consumption. So, your consumption, whatever you receive, that if you spend, every point on this is equilibrium point. Every point on this is equilibrium point. Why? Because whatever you receive, if you spend that, whatever you receive, if you spend that, then it is equilibrium point. Everything in on this line is equilibrium point. Every point on this line is equilibrium point. That's why this is also called as equilibrium line. That's why it is also called as equilibrium line. Okay. Yes, sir. Now listen. Listen. What is this? What is this, sir? What is this? This is this savings. Why it is this savings, sir? Because your expenditure is more than your income. This is this savings. Why? Because your expenditure is more than your income. That's why we call this as this savings. This is this savings. Why? Because, sir, this is income, no. This is our income line. This is consumption line. Your consumption is greater than your income. So that's why this is this savings. Okay, sir. Understood. Now, what is this gap? ये gap क्या है? This gap is savings का gap. This gap is, remember, this gap is savings gap. So this is savings. So there we discussed about this savings and this one is savings. Okay. I hope this is clear. Savings and this savings. If expenditure is more than income, then it is this savings. If expenditure is more than income, this savings. Income is more than expenditure, then it is savings. As simple as that. Okay, sir. Continue. Listen here. What is given here? In the above diagram, in the above figure, the consumption and savings functions are graphed. The saving function shows the level of savings S at the each level of disposable income. At each level of disposable income, what is your savings that is given? The savings curve has a negative intercept on y-axis and its magnitude is the same as positive intercept at the consumption curve. The consumption at zero level of income is positive, and as such, there should be this savings. Even at zero level of income, what is given there? Even at zero level of income, you have consumption, no? So that is nothing but constant consumption. That constant consumption is this savings. That constant consumption is this savings. Continue. So the same magnitude, by definition, national income Y is equal to C plus S. Okay, one more point here. Very important one. Listen. Consumption plus savings is equal to income. Why, sir? Array, sir, new formula? Yes. Y is equal to consumption plus savings. For example, one more approach it is. One more approach. If my income is 200 rupees, I spent 30. Okay. I spent 130. That means other 70 should be my savings, no? Must be my savings. If I save 70 rupees and I spend 130 rupees, what is my income? My income should be 200, no? जा रहा है दिमाग में. Once again, I tell you, every month I will save 30,000 rupees and my office expenses is 32,000 rupees and I give 10,000 rupees to my mother. Every month I give 10,000 rupees to my mother. 32,000 is my office expenses, and this is my savings. What should be my total income? If I'm doing every month this, then what should be my total income? 72,000 should be my total income. No. Hayana. Yes, my total income should be 72,000. Otherwise, how to give this to my mother? How to spend it in my office? How to save this 30,000? Not possible. That's why if you save 100 and if you spend 400, this is your consumption, this is your savings. That means your income should be 500. Your income must be 500, no? Correct? Yes. So that is given here. See, y is equal to c plus s. Therefore, s is equal to y minus c. Ashte. I'll bring c this side. See, y is equal to c plus s. Then y minus c. If I bring this side, then s is equal to y minus c. Hua na? S is equal to y minus c. The slope of the saving function is the marginal propensity to save. Slope of saving function. If 1 unit increase in the disposable income leads to an increase of B unit of consumption, then the remainder should be savings. No, we already discussed about this. Correct. Example. out of 100 rupees, my increase in income is 100 rupees. Increase in income, that means delta Y is 100. I spent extra 60 rupees. That means extra 60 rupees. Out of this 100, I spent 60. That means delta C is 60. Delta C divided by delta Y is equal to 0.6. Nothing but 60 divided by 100. Out of 100, I spent 60. That means what should be other 40? That should be my savings, no? It has to be my savings. That's why government or the economist, these economists say that B is equal to 0.6. Then S should be 1 minus B. That is 1 minus 0.6. It is equal to 0.4, Baba, 0.4. 1 minus B, 1. Yes, sir. Here, see, 1 minus B. MPS is equal to delta S by delta Y. That is equal to 1 minus B. So, marginal propensity to consume is always less than unity. Unity means 1. It is always less than 1. We discussed about this. है ना? See, 0 is less than B is less than 1. Where did we discuss this? Here. कहाँ? यहाँ. कहाँ? यहाँ. कहाँ? यहाँ. कहाँ? यहाँ. We already discussed about this in the previous pages. Okay. So that is given here again. MPC, it's always greater than 0, but always less than 1. That means MPS is also always greater than 0, but always less than 1. How to calculate MPS? 1 minus B. This is MPS. MPS is also positive. Aggregate propensity to save topic is missing. Sorry, average. Average propensity to save topic is missing, not there. Not required also. Is it? Yeah, not required also. So aggregate supply. What is aggregate supply? See, we discussed about aggregate demand. We discussed about aggregate demand now. Now we have to discuss about aggregate supply. So ex ante or planned aggregate supply is total supply of the goods and services which firm in a national economy plans on selling a specific time period. It is equal to the national income of the economy. See what is given in this sentence. What a country wish to sell in a year, what a country wishes to sell in a year, that is considered as, that will be considered as national income. Planned supply it is. It is equal to the national income of the economy, which is either consumed or saved. Either consumed or saved. Listen, AS is equal to C plus S. What is C plus S? Already discussed now. Y is equal to C plus S. कहाँ सर? कहाँ? यहाँ. Y is equal to C plus S. Income is equal to consumption plus savings. What is aggregate demand? How to calculate aggregate demand? How to calculate aggregate demand? C plus I is aggregate demand. How to calculate aggregate supply? Aggregate supply or income, it is C plus S. C plus I and C plus S. C plus I and C plus S. At equilibrium, demand is equal to supply, correct? No, I told you in the beginning, aggregate in equilibrium. Sir, what happens in equilibrium? Aggregate demand is equal to aggregate supply. Equilibrium is equal to aggregate demand is equal to aggregate supply. Sir, what is aggregate demand? C plus I. That is equal to what? Aggregate supply? No. Yeah, aggregate demand is C plus I. C plus S. C gets cancelled. So I is equal to S. This is equilibrium. Oh my goodness. Huh. What has happened here? मोए मोए क्या हुआ? मोए मोए Moe moe. Is it so? I believe no. Again, here. Okay. Listen. We discussed that what is aggregate demand. So it can be demanded for consumption, final consumption, or for investment purpose. We discussed already. Investment is constant. Investment is constant. What is aggregate supply? Nothing but income. Nothing but income is equal to consumption plus savings. This also we discussed. What will be my income, sir? What will be my income? Sir, why aggregate supply is equal to income? What by supplying whatever I supply, by supplying, I receive some income. By whatever I supply, I receive an income, no? So that's why aggregate supply is also income. We also consider aggregate supply as income. After supplying, I start receiving income. That's why aggregate supply is also considered as income. Y is equal to C plus S. Equilibrium में, what is equilibrium? We discussed that where demand is equal to supply. Arey, bachcho, we have discussed this in which chapter? Chapter number 3. Sorry, chapter number 2, unit number 3, supply mein. We discussed this in supply. What did we discuss? What is equilibrium? Where demand is equal to supply. है ना? That is what I am telling you here. Equilibrium is the point where aggregate demand is equal to aggregate supply. We just wrote what is aggregate demand, what is aggregate supply. So, aggregate demand is C plus I, which is aggregate demand, that is equal to C plus S, which is aggregate supply. Aggregate demand is equal to aggregate supply. In this case, sir, क्या होगा sir? क्या हुआ है? C gets cancelled. Is equal to no. C is equal to C. That means I is equal to S. So I is equal to, yes, I is equal to S. This is nothing but equilibrium. सर कहाँ दिया हुआ है इसको? यहाँ नहीं दिया है. No, here see S is equal to I. Equilibrium. At equilibrium, S is equal to I. Or see the point where aggregate consumption is equal to aggregate supply. This is C plus S and this is C plus I. Correct? C plus S and C plus I. At this point is considered as equilibrium point. At that equilibrium point, I is equal to S. I is equal to S here. So, listen, the two-sector model of national income determination. In this section, we shall describe the two-sector model of determination of equilibrium levels of the output and income in its formal form using the aggregate demand function and aggregate supply function. Formally, sir, C plus I is equal to C plus S or I is equal to S. So, this is equilibrium. This is where equilibrium happens. The equilibrium level of income and output in Keynesian framework is that level at which aggregate demand and aggregate supply or output are equal. In other words, investment is equal to savings. Whatever I invest, that I invest with the help of savings. I save and I start invest. I save, I invest. I save, I invest. I don't keep it in my pocket. I save it. That amount I will invest it. So this is two-sector model. Here, see what is income 45-degree line? That is C plus S, income line. And demand line is this one. Nothing but consumption it is. C plus I. Okay, so this is the equilibrium point. Yahan, kahan, yahan. This is the equilibrium point. At equilibrium point, I is equal to S. Income is equal to savings. This will happen in case of two-sector model. In the above figure, yes, sir. What is given in the above figure? Listen. In the above figure, aggregate demand curve is linear and positively sloped, indicating that as the level of national income raises, the aggregate demand or aggregate spending in economy also raises because of marginal propensity to consume. If income raises, then consumption also raises. The aggregate expenditure line is flatter, it is not fatter. I don't know what is the wrong with L, letter L, flatter. That is aggregate expenditure, nothing but demand curve is flatter, correct? No, see, this was demand curve and this was income curve, correct? Demand curve is flatter, no? Correct? Yes. Demand curve is flatter than 45-degree line. Which is 45-degree line? Income line, Baba. Income line. Income line is 45-degree line. Because as income raises, consumption also increases, but by less than the increase in income. The 45-degree line illustrates every single point at which planned aggregate expenditure measured on y-axis or vertical axis is equal to the planned aggregate production. So every point in y-axis is actually 45-degree line. 45-degree line. Every point on 45-degree line is actually what? That is actually nothing but equilibrium point. If you spend whatever you receive, if you spend, no, that is nothing but your income is equal to expenditure. Okay. So which is measured on x and horizontal or horizontal axis. In other words, all points on 45-degree line indicate that aggregate expenditure is equal to aggregate output. But in reality, it will not happen. In reality, this is the demand. In reality, we can assume that if you spend everything, this is the case, sir. Every point is equilibrium. But it need not happen. No, it need not happen. Okay, it need not happen. In reality, if you see in reality, this is the expenditure. This is actual expenditure. Okay. Yes, sir. In essence, C plus I is equal to C plus S. Therefore, the line maps out all the possible equilibrium income levels. For all the points below 45-degree line, any point below 45-degree line, this is 45-degree line, any point below that, there is savings, correct? No? Planned aggregate expenditure is less than GDP. What is GDP? Nothing but income. GDP. And for all points above 45-degree line, planned aggregate expenditure is greater. See, this is 45-degree line. This is 45-degree line. Any point above this, that is this savings, that leads to this savings. We would like equilibrium to occur at potential GDP, in a sense at the level of full employment. So where it happens? Somewhere here, sir. This is the equilibrium point. Only at point E. Which point, sir? Where it is given? Here. See? At point E. Yes, at point E, there is equilibrium. Why? Because actual expenditure is equal to actual income. At this point, there is equilibrium. Easy one. Yes, sir. And at the corresponding equilibrium levels of income and output, Y does aggregate demand exactly equals output. At that level, output and income planned spending precisely matches production. Whatever produced equal to whatever demanded. Whatever produced equal to whatever demanded. You may bear in mind the basic point that according to Keynes, aggregate demand will not always be equal to aggregate supply. That's what I said no. In reality, it may not happen, not required. So, aggregate demand depends on the household plan to consume and plan to save. Nothing but it depends on MPC and MPS. MPC and MPCS. MPS. Aggregate supply depends on producers' plan to produce goods and services. In other words, aggregate supply represents the aggregate value expected by the business firms. It is not required that they will produce so much which is required by the consumer. They, in anticipation of more sales, they will produce more, or because of non-availability of raw material, they might produce less also. Yes, sir. And the aggregate demand represents their realized value. For the aggregate demand and aggregate supply to be equal so that the equilibrium is established, the household plans. See, this is important one. This point is important. To equilibrium to happen, what should happen here in Agbeko? What should happen? To equilibrium to happen, the condition is household should demand same amount of output which is produced by the firm, or firm should produce same amount of output which is demanded by the household. The plan of household, the household's plan must coincide with producer's plan. Very important one. It will happen every time, sir? No, coincident with this. It might happen in some year, not every time. At equilibrium, expected value equals realized value. However, Keynes held the view that there is no reason to believe that it will not happen. There is no reason to believe that it will happen every time. See, at equilibrium, expected value equals realized value. However, Keynes held the view that there is no reason to believe that. No reason to believe that the consumer's consumption plan always coincide with the producer's production plan, and that producer's plan to invest matches always with households' plan to save. Putting it in differently, there is no reason where C plus I and C plus S are always equal. Not required in reality. If that happens, that is purely coincidence. If this happens, that is purely coincidence. Okay. So the investment function I shown in panel B, which is panel B here. I'm so sorry. Here, panel B, this is panel B. Shown in panel B, I, investment function which is shown in panel B, I is always constant. We discussed about this. I is constant. The planned investment equals savings above the equilibrium of income. Savings, the distance between 45-degree line and the consumption schedule exceeds planned investment. Again, wait. The investment function I, not one it is I, is shown in panel B of the figure. Equilibrium. Planned investment equals savings above the equilibrium of income YO. Okay, wait. Correct. So from your YO income here, fine. YO saving the distance between 45-degree line and consumption line. Consumption schedule. Okay, I understood. Okay, what they told here, listen. This is the YO line, no? Okay. This is YO, equilibrium income it is. Above this income, investment line lies below savings. That means savings is more. Below this income, investment is more than savings. That means both are not equilibrium. This is not equilibrium. This is also not equilibrium. Which is equilibrium, sir? Only YO. Above YO, investment falls below savings. Above YO, investment falls below savings. See, above YO, savings, the distance between 45-degree line and consumption line, savings exceeds the planned investments. Correct? No. That means investment falls below savings or savings falls above investment. What is given here? Above YO, if your income is more than YO, equilibrium income, then savings is above. See, savings exceeds investment. Correct? Savings, correct. See, if above YO, if this income, if this income level, savings exceeds investment. Below YO, investment exceeds savings. है ना? Yes or no? See, while below equilibrium level of income YO, planned investment exceeds savings. So it is one. This is not required actually. We know this. If you see the diagram, you'll get to know. The equality between savings and investment can be seen directly from the national income accounting. Since income is either spent or saved, Y is equal to C plus S. Without government, the foreign trade aggregate demand equals consumption plus investment. So they gave one hint about two-sector model. Right now, we know this. This paragraph also not required. We know this paragraph. Don't cut it. Just read it. One time revision. Revision hoga. This is the kind of revision. The equality between savings and investment can be seen directly from the national income accounting. Since income is either spent or saved, Y is equal to CS. Okay, either you spend it or you save it. That's why Y is equal to CS. C plus S. Without government and foreign trade, aggregate demand is always C plus I. C plus I. Aggregate demand. If there is government, then tax is also there. Okay, we will discuss about that. Putting the two together, we have C plus S is equal to C plus I or S is equal to I. Okay, about this leakage and injections, we will discuss about this in next class. Okay. Wait. Don't worry. It looks so. It looks like, sir, there is something very difficult points are given here. No, nothing. Easy points are given. Tomorrow morning at 10 o'clock, 10 a.m., we are going to start with the class again. 10 to 1:15, I am going to take you through economics and we are going to finish this unit. If possible, we are going to finish this unit in the morning session. Evening session, we will start with next chapter. In evening session, we are going to start with the next chapter. If possible, tomorrow morning, in morning session, I'm going to finish this. Don't worry. Looks like very complicated one, but it is not. It is not. It is actually easy one. So far, are you finding, you are finding it difficult so far? Are you finding it difficult, people? No. So it is might be tricky one, but you have to give more attention. What do you do? What do you do, sir? Somewhere 3 hours ka lecture it is. Do one thing. Uh, you watch it again. Anyhow, it is freely available on YouTube, no? Watch it again and again, so that it will help you a lot. Trisha classes is doing something, uh, you know, something appreciable. Why? Because these things they are giving it free on YouTube so that you can watch it again and again. I know that you have less time, but you have already studied old syllabus once, no? Old earlier 5 chapters you have already studied once. This you can put some extra effort. Definitely it will help you. Okay. So being said that, people, thank you so much for your patient listening for last 3 hours. We will meet tomorrow morning at 10 o'clock again, and we will continue this interesting unit. I believe that it is interesting to you as well. We will continue this interesting unit tomorrow morning. Happy weekend. We will meet tomorrow. Okay. Love you all, people. Love you all. Keep studying, keep growing. Bye bye.